What in the world is going on with the 2020 housing market? No one really knows. It's all speculation from here, but I've got one bold prediction and 3 ways you can make sure that you're winning on the other side of this. If you agree with me or you like the advice, make sure to subscribe and hit that notification bell so that you continue to see all of our content. So pretty much as soon as all this started, I talked to one of my really close friends who's been in real estate for over 20 years. He gave some very clear advice, and it was to throw caution to the wind.
Consumers are changing behavior. I see job losses in tech going up, job losses in travel going up. So there are going to be people that are in escrow now that are going to cancel escrows because they're like, ooh, I don't want to leave the house I'm in now. I know it. I know the neighborhood. I don't want to sign up for a bigger mortgage payment. I'm a little nervous about my job.
So I proceeded just like Michael told me, and I started to think very much that, hey, this could get very, very bad. So now I'm kind of looking at it. I'm like, man, am I too doom and gloom right now? Is this actually not as bad as we all think? So here's a couple reasons why I'm thinking that way. My friend Joe Rose, he posted on Facebook this right here, what you're seeing. On April 22nd, he got over 30 showings and 9 offers. And ended up selling this thing over market value. I didn't see that happening. Then I was on the phone the other day with another good friend of mine who had really taken the same approach, backed up, and at the same time, he was finishing up a project in a place here in the outskirts of Fresno that's not even like that attractive. And in 24 hours, this thing got 7 showings, 4 or 5 offers, ended up selling it $5,000 above market value, and they closed in 19 days. So not only were they having success, but they were getting even better results than before the pandemic. Like, is that a total head scratcher or what? So the common theme that I keep hearing from all these professionals, again, guys, I interview a lot of professionals in the industry. I've only been in real estate for under 2 years. So I rely a lot on what I'm hearing from mentors that have been in this for 10 years, 15 years, 20 plus years. And they all are saying one of two things. One, it's either going to be a blip on the radar and things are going to go right back to normal. Or the second part, they're going to see a pretty major crash or some sort of major market correction. Here's my prediction. I think there's going to be a mortgage crisis. I think it will lead to a crash. Again, this is just because I've compiled a lot of data from everyone, but here's my thought behind this. Real estate and the economy is a lot like a domino effect. When one person is affected, it doesn't just affect that one person. It has a domino effect to where it starts hitting the other people hard and eventually leads to some sort of crash or crisis. So I'm going to take one type of person, for example, waiters and waitresses. Let's just say, for example, we get back to normal, whatever normal is, okay? I think what's going to happen is we're going to have 80% of people say finally, and they're going to rush in, they're going to go to restaurants, and they're going to go to sporting events and everything's going to be fine. But there's going to be 20% of people that say, no, I'm not going to test this out. I still am around a lot of elderly people, or I am a person who is elderly or has pre-existing conditions, and they're going to hold off. And here's what we know about waiters and waitresses. They rely heavily on tips. So if 20% of their clientele is gone, that means they're missing out on 20% of their tips. If they're missing out on 20% of their tips, don't you think that's going to hit their income, especially because most waiters and waitresses at a typical restaurant are living paycheck to paycheck? And if they're not able to make the right income to even help them pay for their mortgage or their rent, then mortgages and rents don't get paid. And suddenly, before you know it, the landlords who are leasing it out to them are not making their payments because they're not getting paid. And so this domino effect starts to happen, that it all started with just 20% of people continuing to stay at home. Now, guys, I realize that is a really loose example. I could be completely wrong on that. 80% of people that are going back, maybe part of those people usually turn away from restaurants, and because there's less people now, they're able to go, and that makes up for everything. I could be completely wrong on that. But there's another example that I have that I think will also add to the fact that it's leaning towards a crash. Stimulus money, forbearance, and business loans. Stick with me on this one. We've got, first of all, the business loans, the EIDL. Originally, they said it was going to be a $10,000 grant. That suddenly backed up to $1,000, and now a lot of people are mad. And the way that I perceive this is, hey, we're not just going to continue to make money out of thin air. And so the government really is starting to look at this and say, hey, maybe we were giving away too much money. How are we going to make that back? Now, the way that that affects us and the way that I'm thinking right now is if they're worried about giving away too much money or they've already given away too much money, how are they going to pay that back? Taxes are probably going to go up. Now, on the stimulus side of things, basically you've got unemployed people that are getting money. Some of them are even applying for unemployment that usually wouldn't apply for it. They're getting free money. And what happens when people get money? The whole point of giving stimulus money and giving unemployment money is to help you get through tough times. But if you're sitting at home and you're not spending a lot of money on the things that you usually do, gas and going out to dinner and all these things that usually pile up in terms of expenses, and you have this extra money sitting around, what are you probably going to do with that? Most humans spend it. They don't save it. And my thought is right now, maybe we're seeing so many people putting in offers at homes because they have extra money laying around and they're thinking, what a great time to be able to go buy our first home, because they're probably thinking most people aren't even buying homes right now. So what happens when a person is given money that's supposed to be a cushion, but they instead see it as a surplus? Well, when that happens, they have to really roll the dice and hope that they're going to get their job back, that the money's going to keep on coming in. But what if it doesn't? Now they've taken over a completely new set of expenses that they didn't have before. They get a house, they have a mortgage, they have to pay for all the issues with the house right away. And before you know it, they don't have their job back. Or that money that they were expecting to have come in is no longer coming in. Once again, we have mortgages where people aren't able to pay them. And lastly, what I think is the biggest question mark is the forbearance mortgages. I'm really wondering how many people realize that most of these forbearances, which were promoted as freezes, in other words, meaning, hey, instead of your loan being 30 years, we're going to pause it for 3 months and we're just going to add those payments to the back end. No difference in the terms. We're literally just freezing for 3 months. That's the way it was promoted. But what we're hearing now is, no, it's going to stay 30 years. And this is for a majority of them. I'm not sure this is for all of them, but the majority that I'm hearing are saying, no, it's going to stay 30 years. You can stop paying for 3 months, but then on month 4, you got to pay all the ones that you missed all at once. How many people realize that? How many people are asking those questions as they're applying for forbearance? How many people on the back end of this with balloon payments are going to actually be able to pay that whole payment of the last 4 months? I'm willing to bet that if they wanted the freeze, if they wanted the forbearance, then they probably aren't going to be able to save enough money to pay for all of them all at once. Plus, it sounds like there's some major flaws in this whole forbearance idea.
So this is very important. If you know somebody thinking about applying for mortgage forbearance, or you know somebody who is doing mortgage forbearance, or you're doing mortgage forbearance, you might want to not do so after this. Here's an actual credit report of somebody who went into mortgage forbearance. And guess what immediately happened after that remark was added? TransUnion and Experian immediately dropped this individual's credit score by 75 points.
So seriously, is that even better? Is it good holding off on your mortgage payments and being given that permission, but then your credit score gets hit that hard, or you get a balloon payment? Is it really worth it? These are all reasons why I think that a crash or a market correction is very much inevitable. And hopefully you see this and you're starting to think, well, how can I start to get prepared so that if this does happen, I see opportunities, or in the meantime, I can start taking advantage of opportunities before all this goes down. And I'm so glad you asked that question, because if you can do these 3 things right now, or at least a couple of them, or maybe even just one of them, you're going to put yourself in a position to be able to be set up for when this happens, or even if it doesn't happen, you're going to find success here in real estate. The number one thing that I'm always doing, no matter if a pandemic is going on or not, no matter if a crash is inevitable or not, is get Airbnbs with little to no money and in places that are very non-touristy. So let me give you a good example and a bad example of that. A good example is a place like where I invest in Airbnb here in Fresno, California, where in the month of April and March, I was over 95% booked no matter what the situation was, whether it was good or bad with the pandemic, we still were over 95% booked. Now, Fresno is very much a need market. People need to come here. They don't really want to come here. As opposed to another friend of mine who is in Vegas, another friend of mine who is in Europe, another friend of mine who is in Southern California. They all got hit really, really hard during this time because people stopped going to those places because when you're locked down and you don't have any reason to go on a vacation, then you're not going to go. And so these people with short-term rentals and Airbnbs in those areas got hit hard. Now, how can you get an Airbnb with little to no money like I just referred to? That's a great question. And if you look up at the upper right-hand corner of your screen right now, you just had a video pop up that says the 5 ways that you can get into Airbnb. I would watch that video right now for more information. I would also download my Airbnb profit calculator. It's in the description below in this video. The next exit strategy that you can focus on right now as a real estate investor is wholesaling. This is definitely the number one way with the lowest amount of risk, the highest amount of upside for a very quick transactional way of doing real estate that will help you to get through just about anything, any sort of risk in this market. Wholesaling, very simply, is you are the connector between the buyer and the seller. You find a motivated seller that needs to get rid of their house. Then you find a motivated buyer that's looking to make a profit or looking to become a landlord. You're the middleman. You negotiate the price with the seller. You negotiate the price with the buyer, and you keep the spread. In other words, seller wants to sell their home for $100,000. You negotiate with the buyer and you say, hey, I'm going to sell this thing to you for $125,000, and you keep the spread. You make $25,000 just by being the connector. You carry no risk. You carry no money. You don't put down any money. All you do is take the contract from the seller, sign it with them, and assign it to the buyer. If you want to get started in a wholesaling career or take your wholesaling to the next level, make sure to check out the information in our description below on how you can get started in wholesaling. And the last exit strategy I want to talk about is one of my new personal favorites, buying with terms. Just like wholesaling, this one has a lot less risk than if you were to purchase a home or to go flip a house, and you have very little money, if any, that you're putting into it. This is an instant cash flow strategy that also has a few different payoffs. Let me give you a real life example of a deal that we have going on right now that will teach you a little bit more about buying with terms. A partner and I have a deal right now that we are doing subject to. Subject to means you're basically put on title and you are now in charge of paying for that mortgage. Now, this seller is really happy because they didn't have to go through the home sale process and they didn't have to pay a bunch of fees for their realtor. And we actually gave them $10,000 to take over their mortgage and to buy this subject to. Now, what we're going to do with it is we're going to turn it around and do what's called a lease option. A lease option is basically we're renting to someone. They're paying a premium price to have the first right to purchase that house after the contract is over. They also put down a down payment, and we're going to ask for right around 5% of what the value of the property is currently at. So we paid $10,000 to take over the property, but with the 5% down that we're looking for, we should be collecting right around $12,000. So we're putting $2,000 in our pocket right away. And with the $900 mortgage, we're looking to rent this thing out at right around $1,400 per month. The average in the area is about $1,300. We can offer an extra $100 of rent because we're giving them the first rights to own that property after 5 years of being in contract with us. So we're cash flowing right around $500 a month. And then at the end of the 5 years, we are determining what we believe this property will be worth in 5 years. And they're paying that off at the end as their option. They've been leasing. Now they have the option to own it after 5 years of right around $30,000. So let's do the math on that. We made $2,000 from getting a lease option tenant in there. Then we're making $500 per month on the cash flow, which is over 5 years, $30,000. That's 60 months times $500. That's $30,000. Plus, we're getting a $30,000 payoff at the back end. That's a $62,000 profit, all for a property that we have no money in the deal on. We're getting tax advantage on, and we're getting cash flow. That's an awesome deal. So once again, if you want to learn more about this process of buying with terms, all you have to do is go down to the description below. We've got a link about buying with terms from good friends of mine, Chris Prefontaine and Zach Beach. They teach this all day long. They're the ones that I learned it from, and you too can take this on. So again, comment down below. Do you believe in my prediction? Do you think that the market is going to crash, or do you think this is going to be just a blip on the radar? And what about the 3 things that I just recommended to you? Which of those 3 are you going to take on, or do you have others that you're wanting to take on? Share that with us in the comments. So I really hope this video helped you out. I hope it gives you a clear direction of where you want to take your real estate or investment business next. And I hope that you will subscribe and hit the notification bell so you can see all of our content in the future. Thanks for checking this out.